Hi everyone, thank you for joining. We are doing a video because of everything that's been going on overnight. Now you might have heard of it. Israel launched some attacks in Iran they've retaliated. So geopolitical tensions have risen once again, and it's had a massive impact on financial markets, which some of you might be aware. So we're going to jump straight in and we're going to look at these charts to see, what does this actually mean? What does it mean for potentially for your investments, for your money, and how are the markets actually reacting to this? Because there's always a lot of geopolitical tension, but when you throw Iran in the mix, it seems to cause a lot of other issues. So we are looking at equities. So these are global equity markets. Remember the US, so these ones here where my pointer is, they're not open yet because they don't open for another hour and a half, but it's the Europe and Asia that we're looking at. And the one thing, of course, we're all noticing is a sea of red because markets are lower. So when we get geopolitical tensions, the prospect of an escalating situation between Iran and Israel that could bring other people into the region involved, it could even get the US involved. You tend to see a risk-off environment. That's bad news for stocks and other risky assets. There are some winners though as well, which we'll talk about in a minute. But so far, I would say that assets are reacting predictably to what we've heard overnight for the news. So big losses there for the Euro Stoxx index, less so for the FTSE. I just want to show you the FTSE actually to show you what's moving in the FTSE, because the FTSE is in a bit of an unusual position compared to some of the other European indices. As you can see, we've got some big increases there. So that's BAE Systems. We've got Shell, of course. We have BP as well. Some of the big performers, they are really outperforming today. And the reason why is, of course, this is the reason why. Energy prices, they are going through the roof, up nearly 7% on the day. This is Brent. Again, just follow my pointer here, 73.88, up nearly $5 on the day. So oil, 5% of the world's oil supply is from Iran. So when there's problems in Iran, then obviously there's risks to that oil supply, and that's why oil is rising. Now, a 5% move, 6% move, sorry, 6.5% move for Brent there, 6.86% for WTI. Of course, that is a huge move. But I would say that moves have been fairly muted so far, considering how bad the situation could be. Now, I just want to show you the oil price. The reason why is because for most of this year, we've been speaking about how the oil price has been really subdued and had been, very low for most of the year. Just bear with this chart; it's finally coming up. And then look what we get. So we say that, and then we get this massive spike higher, but we still are lower than we were in January. So the oil price in January was around about 80, it was above $80. So if you look, we tested as high as $79, but the market wasn't willing to go to 80. And I would just say that if you look, yes, geopolitics are really, really important. Yes, Iranian oil supply is really important. But so far, we haven't had any bigger escalation than that. There had been fears that there'd be some blockade or striking of the Straits of Hormuz and some of the other shipping routes around there, which could really disrupt those cargoes of oil. If Israel obviously wanted to target a big moneymaker for Iran, that would be targeting their oil. So far, it doesn't look like that's happened. Now, this is a very fluid situation. It's changing all the time. This doesn't mean it won't happen in the future. So, it's no surprise that this has happened coming into the weekend. These events usually do. The reason why is that then markets are closed. There can be diplomatic efforts from the US and Europe elsewhere to try and just settle things down a bit before the markets open on Monday. However, if we get some adverse headlines during the weekend, we could see oil jump right above 80. But what's really fascinating about the oil price actually had been rising in the days leading, in the kind of the week leading up to this. We saw a big increase on Wednesday. That was driven by expectations that this strike was going to happen. There was lots of talk about it, and then obviously it did. So we went through the 100-day moving average on Wednesday. That came out as just below $70 a barrel. And now we've gone through the 200-day moving average, 71.96, currently trading 74.13, so comfortably above that level. Again, I'm sure you're sick of me hearing this from me, but they do say nothing good ever happens below the 200-day moving average, which means that good things for the price, as in price increases, tend to happen once we're above the 200-day moving average. Now, for now, This is just a reaction to the situation. If the situation deteriorates, or if there is an issue to actual oil supply, and 5% of supply gets taken out from the market, then all of a sudden we could be living with prices around about $10 from where they were not that long ago, when they were trading about $65 a barrel for a very, very long time, basically through the whole of April and May. If we get, prices settling around 75 to 80, that's going to be inflationary. That's going to put some pressure on inflation, along with the fact that shipping rates have also surged today because of those issues with Straits of Hormuz and shipping routes through the Middle East. So when that happens, you do see shipping prices go up as well. So all of those things, all of those imports that we love so much, they become more expensive. So let's also take a quick look at bond markets, because a lot of you say, oh, it's inflationary. It's inflationary, and yes, it is. But we've seen a bit of an about turn in bonds. Earlier today, bond yields were, absolutely falling because safe havens are sovereign bonds, and they were attracting safe haven status on the back of all of this geopolitical tension. But that has actually reversed course, and we've actually seen bond yields start to rise in Europe, and I would expect the same thing to happen in the US as well. Right now, Treasury yields are very, very flat, because we need to wait to hear about what else we are about what the next steps are and what else happens. But I do expect everything to be very reactionary. But one thing I would like to point out, now that I'm looking at bond yields, this is a very rare occurrence. This is the 2-year yield, but even if I go to the 10-year yield, which is considered the benchmark, look at that. UK yields have fallen 17 basis points. Now, French and German yields have fallen a bit more than that, but if we on a 3-month basis, but if we go to a just bear with me, if we go down to 1 month, we're going to see something that's kind of unusual. There you go. UK bond yields are doing very, very well. Remember, when yields fall, prices rise. So UK bond yields are outperforming US bond yields on the 10-year basis over the past month. So yes, bond yields are rising today all across Europe. They're kind of flat really in the US, but I think this is a holding pattern waiting for the next move to come. Now, if we just go back to commodities, let's look at the gold price, because also when you hear geopolitical tension, you always need to think about gold. So gold is up about $40 so far today. So that's about 1%. And again, not a huge move, but I'm going to bring up the chart here, because this is also worth noting. Here we go, very close to the all-time high, which came in on the 22nd of April at 3,500. So we're not far from it now, currently trading at 3,426, so just below $25 from that record high in gold. So we've got all of these kind of events, all of these kind of predictable moves in financial markets as a reaction to what's happened between Iran and Israel. Now, we're certainly not political experts here, but it does seem like this is just one step in a potentially something that's going to last for a little bit longer, or it's going to escalate. One couple of points to note. Again, as I said, I'm not a political expert, but a couple of things you guys should note. There've been lots of talk about nuclear. So, oh my goodness, Iran is not going to meet the US for nuclear talks on Sunday like it was meant to. That's also spooked the market, but there was a report from the International Atomic Energy Association who said that there are no signs that Iran is enriching uranium, which is obviously a key component of that nuclear bomb. So there's no signs that they're doing that at the moment or have started that process. That process would obviously take a while. But the fact that they haven't could temper risk sentiment. It may be one of the reasons why we haven't seen these huge, massive outflows from equities. Yes, Euro stocks, look at my pointer there, it's down 1%, but really they are quite small moves. But it does mean that the equities could potentially be knocked off course for weekly gains. The FTSE there just about to. But let's take one last look at the currency market before I leave you. And as you can see there, the currency market is, this is the US dollar versus the G10 FX space. So the dollar has actually had a bit of an about turn. So the dollar is up against all its G10 peers. As you can see, the Swiss franc and the Japanese yen there as well. They've also fallen versus the US dollar. So does two things. The US dollar is a safe haven, so it suggests that we're in a risk-off environment. But there'd also been a lot of talk about how the dollar and dollar assets weren't going to do particularly well in now, and that they weren't being treated as safe havens. Well, actually, the dollar is. When it comes down to it, the dollar is. But let's zoom out, because it's always important to zoom out and see what the context is for this. Yes, we are higher on the day in the US dollar, but it still looks like a very tentative. This is the dollar index, so the dollar against its largest trading partners. A daily chart, so daily candlestick chart over the last year. The dollar is very, very weak. So yes, we've had a big positive move, one of the biggest ones that we've seen certainly since mid-May. But it doesn't look like we're on the start of any new uptrend. We'd really need to get above 99.80 for that to happen, currently at 98.40. So the dollar's got a long way to go before we're enthused that it's going to do well. And then lastly, I nearly forgot this, but I know there are some Bitcoin fans here. And even though, even if you don't trade Bitcoin, sometimes quite useful to know where it is. Bitcoin is trading at very elevated levels, $105,000, but it is not acting as a safe haven. It has fallen quite sharply and is testing that 50-day moving average there, which comes in, or did test at one point today, but it has made a bit of a comeback. So if I just go to today's daily chart, this just highlights the volatility within Bitcoin. So Bitcoin had been as low as 103,000, and it's currently up about 105. So it's been able to recoup those losses. It had started the day at 106,000, or ended Thursday at 106,000. We then obviously got that news about Iran and Israel, which weighed on it quite sharply, and now it is making a bit of a recovery. So I actually think the risk is done fairly well, considering everything that's happened. Now, we obviously are waiting for what else is going on, and the next level of escalation. But until then, it seems like the markets are doing okay, but it is a risk-off day. Not great for stocks. Oil is doing well, but it hasn't really moved very much. So we're in a bit of a holding pattern right now, just waiting for something else to happen. But there definitely is a risk-off sentiment. So I think there's a lot of people just waiting for the next bit of news. We're going to have very news-driven markets now. So thank you so much for joining, and we will keep you updated with whatever goes on. And do follow us for more. Thank you.